Mhm. Good morning, guys. How's it going? Let some people jump in and we'll dive into it. What's up? How's it going, man? Ramos, Super, what's up, guys? Wagner, how's it going? Jo, Chris, what's up? Brett, how you doing? Good morning. All right. Let's see what Bitcoin's been up to. We'll talk about yesterday's trade because we were looking for a setup yesterday during the live, and it was originally going to be based off this key level here, but then it kind of evolved to a little bit higher around here. I gave like a little adjustment to the signal. We are talking about basically after getting the higher high right here, so we generated this as our currently active strong low. And like based on the order books, there wasn't any crazy buy walls or anything like that until around the point of control, which even at the point of control, I didn't expect a crazy wild bounce like this. So some members jumped out as soon as we got to that point of control. Like this was the candle close that we needed to have happen, like right below our orange line, like our key level. And as soon as that happened, like we just free fall down, but then it had a really aggressive bounce back up. So some people closed around the previous point of control. Others stayed in. I was one of the ones that stayed in, and I got stopped out. So congrats on anyone who got gains off that. I was not one of the lucky few, but um, yeah, I was expecting maybe to see the previous macro value area high right here hold us down alongside with the VWAP and the Fibonacci retracement from this level to this level. There is I think a lot of still bearish confluence at that area to keep it from hitting our stop loss, but it ended up getting that strong aggressive bounce. And then here we saw this was like a make it or break it moment. That's why I got it highlighted. Like here we could either SFP'd off these highs in confluence with the 50-day EMA or get that confirmation bounce showing us acceptance inside of this previous valley area from this point here. Let me zoom out right here to here. So we got that acceptance into the valley area, and we've got that run up to the valley area high. And now we are dancing on top of this valley area, potentially preparing to get acceptance back inside to the downside. We're currently using like this local valley area point of control as a form of support. And if we lose that level, then we would fall right down to at least the local valley area low or the previous point of control here that's pretty strong that could hold us up. But yeah, and there's also confluence here with a little micro demand zone. So it does look like we might retrace down, but it might be short term. Let's see, get the little demand zone here drawn. Send it back. So yeah, short term, I believe that we're going to be bearish. We can still break to the upside, of course. We had like decent news come out yesterday about the potential ceasefire in the war there with Iran. And I'm pretty sure the news came after the confirmation. So yeah, one of those moments where you feel like you live in the simulation. But yeah, we got the confirmation here, and then the news came out shortly afterwards about the ceasefire. See, so yeah, we got this level here. So we get like a 15-minute candle close below 104,713 on the buy bid chart. We break, simultaneously below this point of control along with it. Then we can start targeting down here. Then up here is our hourly level. We spoke about this level before. If we get that continuation up, we got to worry about the liquidity that's resting above these highs, like we use as exit liquidity, in confluence with this supply concern right here. This is around like 106.8 level here. So we just got to watch that. If we do get that break in that continuation, this is where we might hit our heads or slow down at least before continuing back up further. But yeah, that's pretty much it for Bitcoin. Like the short, it's a little bit more friendly for traders. A lot more confidence on the short. And jumping on the continuation, like I'd want to see, a break of this the key level here. Then we have to watch immediately our heads here and then get that continuation to here. But yeah, the short will be a little bit more friendly to take action on. We do kind of want to make sure we have a good stop loss guard, obviously. You don't want to just short it just because we know it's going to likely come down after this break, right? You want to make sure that we at least have some kind of decent stop loss guard to give us a proper risk to reward ratio when we take that short. Because right now it's not looking very R&R friendly. It's only a 1 to 1.3. We'll need to have a stop loss guard roughly around this value area high here, or at least the VWAP here, right? So hopefully we have some kind of bounce reaction to give us a decent guard for our stop loss. I prefer using strong lows or strong highs for my stop loss guard, but sometimes you don't always get those opportunities. So we'll see what kind of structure we get when it breaks. All right. Israel's already accusing Iran of violating the ceasefire. Jeez. It's like a bunch of toddlers. What's up, Andrew? How you doing, man? Kyle, do you think Bitcoin can really come back in, or do you think it's still returned lower? Everybody was bearish. Yeah, let's look at the daily. So we have we created a new low, right? Obviously, when we got that brief period of getting below the value area high here, the macro value high, we rotate down to like I think we like front run our key level by like $200 that we were watching, or we're anticipating this to act as a really strong level of support. And we got that really good, crazy strong move up. We'd have to break this high, honestly, in order for like the majority of people to think bullish again. Unfortunately, we're gonna have to trade the internal within here to prepare for this break, right? So hopefully we find some front run opportunities. We kind of have one right now where like we're building a potential pennant for a continuation up to this supply concern, right? And we might get continuations from there to bring us to our level where people would start turning on their bull goggles again and prepare for like a more of an uptrend. But we are still technically bearish right now. So like this is the level that I would want to see broken. And then everyone would be like freaking out, bullish, bull mode again, right? There are likely going to be front run opportunities like here, for example, like I said, we could break our key level here, rotate here, consolidate, continue again. Taking it one barrier at a time along the way up. The liquidity from this high, this supply concern here, but it's just taking it one barrier at a time. But unless we get lower lows again, um, yeah, unless we get like lower lows, let's say we pull back a little bit more and then we come down. If we could rotate our key level from here to like here on the daily, and maybe we'll build another crazy falling wedge like this, right? Seems to be the theme for this cycle, right? Falling wedges everywhere we go. It's the start of the bull market. But yeah, that's Bitcoin. I've got another 45 minutes before I got to jump on a call with the community. So we can look at some assets for you guys if you want to look at something. Uh, what is a strong low or high? So that's a. It sounds like an easy question, and it is kind of easy, but it's a long-winded answer. Basically, if I just to draw this out really quick, because I know a lot of people already understand this, but we have a when you learn about how to be a trader, the first thing you want to learn about is what's called like market structure. It's like your foundation to everything, and all your other rules is like a layer you put over top of this. So basically, visualize like this is an uptrend here. These are candles, and if we get a pullback of at least 2 candles, we create an unclaimed high or a weak high, and when we break that, we create a break of structure right here and generate a strong low, right? So this needs to be at least 2 consecutive candles pulling back to generate that weak high, like I said. And then when we break it, strong low. The price action goes up, pulls back again, at least 2 candles, higher high, break of structure. And this rotates from here to be the strong low. And if price action were to come back down, then this would generate what's called like a change of character. And then the strong low then becomes a strong high. And these levels are typically guarded, and you can use them as stop loss guards, and you can use them as key levels if they're in confluence of positioning for a good trade. And like the confluence that I look for is a break of uptrending momentum between those levels. Once you have your first break of structure after a change of character, you can have momentum drawn to give you the pace of the buyers and the sellers. And then once we get that change of character and confluence of the break of this momentum at a value area high, I'll be looking for like shorts, for example, or if we generate like a strong high to be broken at a value area low after a break of momentum, it could be a good opportunity for a long as well. So yeah, I highly recommend like doing research on market structure. We have lessons on it inside the course, like in good detail, so you can get a good understanding of how market structure helps generate order flow, and when certain key levels break, you can get an understanding of like why fast moves occur after certain levels, all that fun stuff. But yeah, that's what I mean when I'm looking at a strong high right now for like Bitcoin. When we look at the daily structure, right? We had here, we had a pullback, right? Came up, it came down. We broke that, gave us a change of character on the daily. So during that time, this was our strong high. We came up, we got another lower low. So it rotated the strong high from here to here, right? And so if we come back up here and we break this, then we get a change of character. And on the larger time frames, people think bullish again. So on the lower time frames, if you were to focus on just longs instead of shorts, that alone will help increase your win rate if you are trying to trade alongside the macro trend. So that's why like most of my trades lately have been shorts ever since we've had this change of character. It definitely helped with our win rate, just focusing mostly on shorts. We did have this brief moment of a good move up, but we're really in once we confirmed this top, we were really in like short mode. All right. Yeah, so we're still technically bearish, like macro on Bitcoin. Hope that helps you answer your question there. Richmond wants to look at virtuals. Okay. Oh, we have virtuals already open. I'll just delete that. There we go. Virtuals reclaimed its 200 EMA. Nice. Okay. Oh, what an awkward price action though. Yeah, so we had this ascending double bottom here. We broke that neckline while simultaneously getting above the VWAP. Fought against the 200. Had this awkward whipsaw, which would have been a really big pain in the butt for traders. I could see people like jumping in on this long. Yeah, I could definitely see people jumping in on this long and having their stop loss somewhere around here and then get knocked out before coming up. A little awkward. And then we melted right through this like it wasn't even there. Held it. Yeah. Now we're hitting our head off of the 50-day EMA again. Next little barriers up here. So a little bit like Bitcoin in the sense where it's like consolidating for a potential continuation or even a reversal. We've already lost uptrending momentum here. We're below the VWAP. We got previous point of control holding us up. Where did this POC come from? Zoom out. Okay, this little previous little supply / demand zone. We held the point of control consistently throughout here, and now we're kind of holding it as support right now. So yeah, virtuals is kind of like in a make it or break it kind of moment for this continuation. With the amount of confluences that we have against it, I'd see it's more likely to come down than it is to go up. I would mark this whole zone right here. All right. Unfortunately, it's like it's changing characters here, way down here. So I'm kind of hoping that like in order for us to have like a good form of confluence for the short, I'd like to see us go up one more time, get a higher high, stack more liquidity below us, right? Hit our head off of this ascending resistance, and then maybe have a front run opportunity here like there was here. There's definitely an SFP right here. It was a really good short opportunity right there. So congrats to anyone who took that. Yeah, that candle would have been a good short candle. Yeah, so if anyone's in that, sorry that I said this, but I would prefer like if we get like another like opportunity, prepare for a potential short again. If there's a front run opportunity for a short, then great. If not, this would become the key level if we got that higher high, and then we could prepare for that short. There's a little demand zone here you got to watch out for alongside with the order block. So just gotta watch out for that. But yeah, down here is where I'd prepare for potential reversals as well. Undo that. There we go. It's not doesn't look very trader friendly right now. Wait, we're at its next barrier. Let's see. What's the next request? We got INJ and Teo. Was Link first? Oh yeah, Link was right before it. So we'll look at Link really quick. I saw Link was on a tear and it's doing good. Oh yeah, similar to like Bitcoin scenario here. I didn't take this short. I was preparing for it because we had this key level where if broken, we'd have a move down. We were targeting like this little demand zone here is what our primary target was. But we were hoping for a continuation down. I was mostly paying attention to Bitcoin, but yeah, Bitcoin broke its level. Oh, this could have rotated from here to here, giving a little bit of an earlier edge. And yeah, then we kind of bounced off of this previous key level and ran up. We broke that downtrending momentum. Surprised to see it already back up here in the supply concern. So we got acceptance back inside this valley area with this break of structure that occurred right here, telling us that we could rotate to its valley area high. Right when we came down here, let me draw it out. For anyone's trying to understand like acceptance into valley areas, it's the first break of structure that occurs inside the valley area or that um, happens while simultaneously getting acceptance into the valley area. So like, for example, if you had the break of structure, well, this is great. It's a good example. So here's a pullback just prior to getting into that previous valley area low. And then we get that higher high, giving us a break of structure for continuation, generating this as our strong low. So during that moment, we got acceptance in the valley area, and then you could start targeting an extension of your target, get an extension of your target to bring it to the valley area high. And we get that full rotation up. On the lower time frames, in like the 5-minute, we've got an opposing change of character right here. So that could have been a good warning for you to tell you that we could be coming down into the valley area low again. And we did. So now we're kind of like dancing inside this valley area right here. We're building an ascending like regression trend, which is like bullish while it's active, but bearish normally when it breaks. Right? Because statistically, it's more likely to break to the downside because of the liquidity behavior, right? We're grabbing liquidity, grabbing liquidity, grabbing, grabbing, but we keep adding to the downside. We're not taking, we just keep adding and adding and adding. So if we look at the heat maps, we could see that we're more likely to have a majority of the liquidity below us than we do above us. And if you think like a market maker, where would you want to try to enter your trades is where all the liquidity is, right? Let's see, if we go to liquidation heat map, we pull up chain link. We can look at it on the 24-hour. But one thing that's good habit to get into is grab your measurement tool, see the age of the structure or the age of the range. It's 14 hours, so we can fit everything within a 24-hour heat map. And here, yeah, we can see that a majority of the liquidity is below us, but the top side's actually not doing that bad. You got 1337. There's a decent amount of liquidity, but yeah, most of it is below us. And a majority of it starts right here at the bottom. But most of the weighted liquidity is here. And that's likely what induced this order block. It's like a large amount of trades that jumped in and injected more liquidity right below it. So if you visualize the order flow, people, stop losses and the liquidation levels will be right around here. But yeah, so where we have for our levels here internally, we've got it's a decent level right here. So if this breaks, Prepare for a short, target these lows, but be very mindful of this level here near the previous value area low here. This is our currently our active range, right? You got to visualize the behavior of the price action that we had before in this value area, right? So if we fall down, we might only hit off the previous value area low like we did consistently throughout here, but we could still deviate below it. But again, be very mindful of the previous value area low if you jump in on this short. If we manage to go up, which is not very likely based on this posture, but Bitcoin's positioning is kind of 50-50, right? So even though like this statistically is more likely to break to the downside, it doesn't mean it will. If Bitcoin's going to go up, it'll get carried quite a bit on the way up because Chainlink has a lot of Bitcoin pairing liquidity, just like most assets do. So if Bitcoin goes up, most assets will go up with it because of that. So if we get that higher high, this is where like our next level or here's I'll be worried about is like 1375. That's Chainlink. But yeah, if you don't want to trade the long, like I personally wouldn't trade this long. Even if it does break, we know where we're going to likely get our head hit. I will be more focused on like preparing for the bearish posture and taking the short if the short confirms. Okay, so let's see what's next crest. Hey, good morning. How goes it? Was that Bitcoin short that you had up just a moment ago something that you are looking at for a scalp? What were we looking at for a trade for a 3-day swing? A 3-day swing. So swing trades, you need to be jumping in on a position of strength, and that so there are ways to like determine like we have an old enough range, how long it would likely take for us to hit a target. And like we don't have the structure right now to define an entry that will allow you to hold for 3 days just yet. So if you, for example, took like the front run entry of this double bottom right here, where we had this change of character, like this could have been a potential 3-day plus, maybe even 7-day long trade. It all depends on like where you enter and where you're gonna be watching your barriers for potential continuations along the way up. So you babysit your trade every time we get to a new barrier or key level of interest, like this, for example. And they at those key levels, you define whether or not you should be staying in your trade, right? They're like target extensions. Originally, when you're looking at this double bottom, you'll be looking at the local target of just around here, like 100,900. And but we got above the VWAP, we got above the value area high, and we got a break of structure telling us that we're likely going to continue out of this value area. And after hitting our head off the previous value low, we pulled back a bit, but it's going to continue to go up. So, like, if we had a range bound structure, let's say that was like 7 days old, and then we broke that, I could say there's a trade that will likely take about 3 days before they hit their target. So we look at ranges. Normally, the target is hit within like 10% of the age of the range, but and we don't have anything postured right now for a 3-day trade, unfortunately. If we were way up here at this supply concern, right, in line with this macro downtrending momentum that's been holding it down since its all-time high, at this key area of interest, this could become a 3-day trade where if we confirm the short after hitting our head off this, and we check the order books to see if there's a giant sell wall, and we confirm that structural break like we did here, when we had that break of structure, that could be a 3-day trade for sure. But right now we're kind of in between a bearish correction or a potential internal bullish continuation that might not last very long. But when we get around 109,000, that's where I prepare for like a 3-day trade, man. and it would be short. Yeah, last time we were here, it was about a day and a half to the bottom before we had a decent rally back up. Um, I think even here we had an opportunity for an SFP. Yeah, there's an SFP here. That SFP might not have thought that it could like take last as long as it did, but that SFP would have been, I think, like a week long trade if you got out around the double bottom, or, 6 days. But again, like you look at key levels, see the structural range, and if it broke to the upside, you might have exited that trade, like listening to the warning sign, right? And that's 3 days and 8 hours. But yeah, next 3-day trade, prayer around here. We might not get it, but prepare for around there. And that will be around probably around like Wednesday, like tomorrow or the next day, if we do get up there. And then I'll let you guys know on during the live what kind of key level that we'll be watching for the trade, like we are right here. Key level here for potential continuation, key level here for potential rejection. I hope that helps you with your question. Basically, it's not up to us. It's never up to us. It's up to the market and the picture that it paints. And we take that picture as traders and just try to determine the likely probability of direction. And our goal is to stack as much probability as we can with our rules, our trading rules, right? Stack those confidences so you can increase your probability. So let's look at INJ, guys. I think we have an INJ chart. Yeah, we haven't looked at it since May. No problem, Rob. Glad I helped you out. Can you share how you would use Shi High here, hourly, giving us some red vibes, local golden pocket 7862? Yeah, we can go through that. Just gonna go through INJ really quick first. INJ. So we had a key level here marked the last time we looked at it in May. Was that March? That's March. Jeez. It's been a little while since we looked at it. But yeah, that level would have worked out taking it, but yeah, because it generated a inverse head and shoulders. Like once we get acceptance into this previous value area, we behaved like we would, right? As if we were in it again. Built a short, low time frame falling wedge within it, then broke to the upside, confirming a inverse head and shoulders like Wyckoff accumulation. And after we broke that level, however, this could have been front run for sure. Like just looking at the daily structure, we evolved our high to here, and we built an ascending double bottom here for continuation. Some traders would have taken action on that. Yeah. And then we shortly recently lost our uptrending momentum right here. Momentum, by the way, is really helpful for anyone who like struggles with holding their trades. Like once you have that change of character and you get your first break of structure, you can start using momentum on that time frame to help determine the pace of the buyers, where people are undercutting each other. And you can look at the order books too to see where the orders are trailing it, right? To validate your trend line. Like trend lines aren't something you should take action on, but they're very great alert systems to help you determine when you should be preparing to take some action. We recently had a head and shoulders after hitting a head against the 200 EMA and getting crunched between the 200 and the 50 EMA here and here. I personally hate it when this happens. Like I hate trading like any asset that's caught between the 200 and the 50 EMA. And I think it's just because my win rate kind of goes down. My rules don't work out as well. But yeah, we broke momentum and confluence with that inverse head and shoulders. And now we're kind of in bear mode again. I think we've already hit the technical target for this bearish head and shoulders here. No, but oh, we didn't. Man, that's such a good opportunity right there. We didn't scoop that low. So we added more liquidity here. So that kind of would make people bearish too, seeing that there, not taken. It doesn't have to be taken, but it does make you feel like you're trading on a glass floor sometimes. Right now, it's fighting the 50-day EMA. I'm gonna pull a fixed range from here to here. And so we got some confluences here to prepare for shorts on INJ. I'm looking at the hourly. Awkward. And so see what happens. But if we get if we position ourselves above the value area high, I'll be preparing for shorts. But because of the 50-day EMA, I want to make sure that my key level is in line with that 50-day. It might take a little while for it to curve up. But yeah, I don't want to short into the 50-day EMA and then get knocked out immediately after jumping in. So we could have like some bearish posture here. I wouldn't take this short, but if we end up not like just using the 50-day EMA as resistance alongside with the value area high here as resistance, we don't make it further than this, then yeah, if this level breaks, we'll likely get that full rotation down to $11.03, like this previous point control in the active value area low. Let's see, we got internal structure you can try to short off of if this broke. It would be even better if we got an SFP up here. You have like a lot better R&R. What you need to have for an SFP for anyone who's like new, let's see, what you look for is pretty simple. You want to have price action come up, grab the liquidity from this wick. Well, you do that just by getting a higher high. We just grab it with like a wick, and then that same candle that comes up and grabs the liquidity needs to close back inside here. So this will appear like a wick above it. It's all a shadow wick, and the body needs to be back inside the active range. And when the body closes, you take the short and you put your stop loss above the wick, and you target your local barrier lows. But at these areas, you'd kind of hope for the continuations down, right? At each one of your barriers, you got to watch them. But once we escape the range, you don't really need to watch your trade nearly as much. You just set alarms at your next key levels so you don't feel emotion, and you only look at the chart when it's appropriate. But yeah, set your alarms around here if the SFP were to occur. That'll be kind of like the dream scenario, but we don't get to choose what happens, right? But that would be a really good scenario to prepare for. And we are in an area where if you were to prepare for a bearish SFP, the confluences are stacking in this zone could help induce stronger continuations down. Now, if you did an SFP right around here instead, then your probability of a continuation down isn't very high. So you want to be at the extreme highs, at the value area high, stuff like that when you're preparing for a bearish SFP. Just like a bullish SFP, you prefer the position to be at a value area low or a deviation below the value area low. So you can have that increased probability of a continuation. But yeah, that's INJ. I hope that helps. We have an INJ chart. I'll save the layout and send it to you guys in the chat. I do have a call in 15 minutes with the community, so I got to head out soon. But we have I completely agree. That's all trading is, being flexible and patient with what the market gives us. Yeah. You don't want to force trades just because you want them to happen. You got to wait for them to come to you, wait for all your rules to be met, and then take the trade. And if you have 4 rules and your 4th one isn't checked off, don't take the trade. You don't know the statistical outcome of that trade. even if it's only just one of your rules that you're trying to like dodge, right? If you're if you become a trader and you're doing this full time, then you backtest your rules. You know your probability of winning. And if you veer away from those rules, then you have no idea what your statistical outcome is anymore. SUI request. Uh, June 20th. Sui's got this ugly posture. So okay, got our supply concern that we hit our head off here. Which kind of gives me the same vibes as Chainlink. We dipped down below this like falling wedge support level where we had buyers consistently like, matching the pace of this trend line. And we had this previous key level that we used to help generate this long that we coincidentally used it as support over here. We built a inverse head and shoulder posture right here, right? These are great because like the probability of hitting their target is really high. So if you only pick one formation to trade, guys, the inverse head and shoulders are great because like what they do in the background is incredible for the order flow. Um, you're stacking liquidity above this neckline, and that liquidity is then used as buy side liquidity to induce a pump. And like market makers love painting these pictures because retail behave off them like the way they like um, basically if they're trying to aim for something, right? When you have this kind of momentum, you grab the click and drag the measurable target, and you see that they're kind of like aiming for liquidity that's resting above this level and the liquidity that's resting above here. And we grab the liquidity from here, which is used as exit liquidity for large players that are trying to get out with the least amount of slippage or least amount of price impact. And yeah, so we scooped up that liquidity, added some above us here, and now we kind of get that. We could be potentially building that bearish version, like rather than inverse head and shoulders, we could be building that bearish head and shoulders posture, but it's kind of ugly. Like this head and shoulders wearing shoulder pads for sure. Like that's kind of got that you got that bull flag leading us into this pump. And we're coming back, acceptance back inside the valley area. And how are we behaving off this? Yeah, we're respecting the valley area high. It's pretty young. We got a macro, we got a previous stronger valley area low. So I'm just gonna mark our own local valley area. So prepare for a potential return back up. We grab this local liquidity before coming down. Like volume's gonna pick up in like 20 minutes or so. So let's see if we get if we hold our local valley area low support level for that liquidity grab and then come back down. You could use potential confluences from Fibonacci from the high to the low. And see if we reach up to that golden pocket area. But I think that with base amount of liquidity, like the confluences here, that we could come up, just hit our head off this area and come down. The range here is kind of tight, so you might not be able to trade this unless you're in like the super low time frames, like the 3-minute. But if we break to the downside, we have clear demand here, right? Whenever we have this impulse move, base, impulse move, these are demand zones. Same thing if we come down, impulse move, then base, impulse move, supply concern, right? And these usually generate the floor. Like this is the demand zone, so this generates the floor to a potential newly developed range. So this is kind of like a warning sign that we could become range bound here, with this being our extreme high and this being our low. Yeah, super. Insanely common. So I'd mark this zone here to prepare for potential longs or to prepare to exit any existing shorts. That's it. Yeah, I'm not sure if I would short this from here to here. Or the key level I'd watch is right here, this level. Basically, the value area low, the close below that could just bring us down here, but I don't even know if I would trade that. I'd almost rather wait if it were to come down. I'd rather wait for the opposing change of character response. I think a double bottom, for example, and then jump in along there. Or if we got the opportunity to see what kind of structure we have here for a short. So basically, prepare for long here or prepare for short here. But make sure all your rules are met inside these zones. Um, okay, I got about 10 minutes. Um, have you found any particular conditions that set when and how much the liquidation you have is reliable on where we're going? Uh, yeah, so I would typically want to see $40 million in a single zone. So if I see $40 million or more, then I know that market makers are interested in that area. So, uh, and the liquidation heat map, you could use the heat map for helping you with targets, right? Where key levels are in the heat map, or you could use them as like entry condition for help you with your entry condition. So if a market maker is looking at an area of high amounts of liquidity, they're likely going to be using it for exit liquidity if it's above us, or entry liquidity if it's below us. And if you have that liquidity stacked with your own form of confluences for your rules, then that can help you a lot with increasing your win rate. And when you jump into those kind of zones, you'll be jumping into those zones with the least amount of slippage as well, because you could take advantage of that liquidity too. Especially if you're someone who's trading with a large amount of volume, like liquidation heat maps will be really helpful for you. But yeah, $40 million or more is what you kind of want to look at for a key level of interest to like kind of stack that with with your confluences. But if you see more than that, then that's great. More the merrier kind of thing. But it's also relative to the amount of liquidity that's actively on the chart at a time, right? So if it's times during like super low volume and you're looking at like the 12-hour or the 24-hour, you're going to see with a majority of the time it's going to be less than like 40 million. It could be like 20 million, but relative to everywhere else, there might only be like $500,000 everywhere else. So that 20 million zone would be more lucrative to watch in like the lower time frames. Shihai here. Yeah, let's pull up Shihai. I forgot that question was asked. Um, so adding Shihai to my chart. I think I already have it on my chart. I just need to. Yeah, here we go. So we have like I like using the Shihai on the 15-minute or above. It takes a little while for it to populate, but here we go. So like here's Shihai Diamond. Your question there. How would you use the Shihai here? Hourly, give me some red vibes. Local gold pocket 786.2. So yeah, like they're good for confluences. So if you have them, I've noticed that if you have like a 15-minute tweezer reaction like this, and you have a Shihai diamond on top of it, on the candle, usually that is engulfing. This one's engulfing here, for example. Those usually give you at least a 1 or 2 almost every single time. It's insane. So you just put your stop loss above the high and then target the 1 to 2 after the candle closes, and you're great. If you see them in confluence with an SFP, that's also great. Like here, for example, we had a local SFP from this liquidity grabbed here, candle closed back inside. And then shortly afterwards, we got a she high diamond, you probably would have jumped in on the trade already, but seeing this confluence could have helped you say, okay, cool, we might get a stronger continuation. But yeah, she high diamonds on tweezers is what I've mostly been using them for. And if they are adding to confluences like an SFP, then I would more likely to take action on the SFP as well. Like this one's a good example too. We had a this one kind of printed after, like before the SFP confirmed. So that's a little bit, obviously this one we had the benefit of hindsight up here, but this one would have helped a lot actively in your trade. You see the diamond up here. We have our local range, candle close here, liquidity grab here. So this is the SFP candle. You take the trade. I would be targeting the value area high as my barrier concern, but also be watchful of this local low. And then we ended up doing pretty well. We had the break of momentum here, change internal change of character here. So that was your warning sign to get out at that time. And then, yeah, if you didn't get out, you would have been knocked out for sure. But yeah, they're great. If I were to use them in confluence with anything, I know one thing that I would recommend is just, use them alongside your SFPs. You could even make it a rule saying I will not enter an SFP unless a she high diamond has appeared within, you could say a 5 candle range of the SFP, right? It's called that's called aura backed rule. So you create an aura around it. How many candles this way? How many candles this way? And you can generate an aura backed rule. Like this one, for example, you'd need the aura backed rule, like especially after the fact. Yeah. So if you were going to be using it based on the aura backed rule, you'd be entering late, waiting for the confluence. If I were to say, if you're going to do an aura backed rule for Shihai, then I haven't done any back testing on this, so don't take this as like concrete advice. But I would say if you're going to do an aura direction this way, make it a lot less, like only 1 to 2 candles maximum. Whereas this way, you can do like 5 candles that direction. So if you see a Shihai within 5 candles over here, or 1 to 2 this way, you could then take it with alongside the SFP as a part of your rules. But yeah, that, like I said, make sure you back test the crap out of that before listening to those rules. But with the tweezer tops directly right above a 15-minute tweezer top, if you see that on the engulfing candle or on the bullish engulfing candle, there's an example of another tweezer, like a tweezer bottom almost. Not a very good one, but yeah. But yeah, I hope that answers your question, man. I do gotta go, guys. I got a call that starts in like 2 minutes. So they work well in the 1 hour, except of SFPs will stop you out when they enter off SFPs itself. I gotcha. Yeah, she high's great. Let's see, what wise words of advice do you have for this info about the options experience? Oh, expiration mentioned above. Mentioned above. Trying to find the question. Sorry, guys. But yeah, so basically what will happen is like every last Friday of the month, we have contracts that expire. Think of it like an FOMC meeting. That's kind of like how you kind of treat it. It's like a lot of your data that a lot of traders use to help determine if things are bullish or bearish is based on those contracts. Which ones are they actively more bearish? Are they actively more bullish? So it kind of creates a reset period of low volume, but initially it's a strong amount of volume when the options expire because they'll be entering new positions after the fact, right? which correlates really well with like the monthly candle close too. Where you normally have an inducement of volume after that. Um, but yeah, I would just say just treat it like an FOMC meeting in the sense where like while they're expiring, you might want to like step back on your trading, unless you see clear vision on your charts, of course. Um, but yeah, you gotta prepare for it on the last Friday of every single month. And sometimes it's a large amount of volume, and sometimes it's like, whatever kind of thing. But you can kind of determine that by based on the amount of the valuation of the contracts that are expiring. If it's like in the billions, let's say something like crazy, like $10 billion worth of options expiring, then expect crazy volume. How low does Bitcoin need to drop for XRP to jump into its previous year range around 6 cents? And how likely is that to happen? I do have to head out. I'm like 1 minute late on the call. That's a great question. I wish I could answer it. Message me inside the Discord and I'll answer that question for you. I'll get to you by the afternoon because we're normally in our call until like 11:30 ish. Alrighty. Sorry about that, Gold. All right, guys. You have yourself an amazing day. I appreciate everyone who's been watching today, and I'll see you tomorrow morning at around the same time. But I got to jump in on the community call now. See you guys.